Good afternoon to you, our virtual listeners. My name is Reza Ismail. I'm head of bonds at Prescient, and in this Prescient soundbite, I would like to share with you our assessment of the budget, which was tabled yesterday by the Finance Minister Tito Mboweni. In short, and to speak very directly, our assessment of the budget was that it was a smart, sober, and responsible budget. But any assessment of the budget necessarily needs to be located within the policy objectives that were set for the budget at the time of the October 2020 MTBPS. And these are specifically to set South Africa onto a path of economic recovery, and secondly, to improve the trajectory of the public finances such that it becomes a lot more sustainable. Prior to the budget, myself and the team had endeavored to identify 3 key pivot areas or areas of concentration that would help us navigate the speech. These are specifically the issue about the overrun in revenues or revenues that had outperformed the expectations that were factored into the October MTBPS. Secondly, what would the Finance Minister's stance be with regards to the public wage bill? And finally, whether there would be any changes that would be made to the financing program, and specifically with respect to the size of the weekly bond auctions. On all these 3 interrelated pivot areas, the high road scenario, it can be said, materialized in the event. So starting with them sequentially, on the first issue, what was then done with outperforming revenues or revenues that outperformed the October MTBPS expectations was that these were used to bolster the sovereign's cash balances and will be deployed in improving the debt issuance profile over the medium term, such that less bonds now needs to be issued in the forthcoming 3 fiscal windows. On the issue of public wages, very pleasingly, the minister maintained the very hard and direct line that was a continuation from the stance at the time of the October MTBPS, in the sense that there were absolutely no concessions that were made with regards to increasing the size of the public wage bill. This is a very positive development. On the third issue, the issue of the size of weekly bond issuances, and as it pertains to the overall debt issuance profile, very pleasingly, another positive development was that due to the fact that cash balances had been bolstered because of revenue overruns or revenues outperforming expectations, this cash balances will now be deployed into low debt issuance profile over the next 3 fiscal windows. This is a very important development, and it carries a massive signaling effect in terms of market prices, and certainly a massive signaling effect with regards to the bond market in particular. As it pertains to our positioning, we had long since held the view that there was excessive pessimism that was priced into the long end of the sovereign yield curve. And now with less issuance coming on stream as a result of a lower debt profile, this is clearly price supportive, and it is something that will, in time to come, lower the overall long-term sovereign cost of capital. So on the whole, the issue with South Africa's budget has never been an issue with the problem definition. It's always been an issue with regards to the execution of already well-articulated plans. And we think that the current budget, in terms of what was articulated yesterday, takes meaningful steps in that direction with regards to both the actual concrete actions that will be rolled out in time to come, but also in the demonstration of political will to really address the issues that are most pertinent. Thank you for joining us in this Prescient soundbite, and I look forward to speaking and engaging with you in the not too distant future. Thank you.